Hello and welcome to Hot Commodities Brokerage Special. I am Manisha Gupta and the headlines on the show are: the Samvat 2071 is closing with higher prices for agriculture. The spot chana prices are up 70% in past year, while spices and oilseeds gain between 40 and 30% respectively. And the year gone by has seen a big makeover as commodity markets regulator merged with SEBI, and the sector is now awaiting more products and index trading to begin with. The commodity space has not done well when it comes to the non-agro sector, where the crude prices are down 40% in last Samvat. The metals have seen a decline of 15 to 30%, and the precious metals are posting a third straight year of decline. Let's start off with Ravindra Rao. He's head commodity research at Anand Rathi. He joins us in the studio. We also are joined by Navin, Mathur, Kunal Shah and Kishore Narne. All the top 4 brokerages in India are with us to tell you on what you should be doing in next Samvat now. But to start with Ravindra, and let's start with you first, how would you sum up the previous year? Because we have seen a huge volatility in commodity markets. Commodity actually has been the big theme when you look at the previous Samvat.
Yes, I feel this year we have seen a fall in almost all commodities, mainly because of the global uncertainty which we have seen in the international markets from the US, from the eurozone, and now it has gone to China. China is slowing, and that is why we are seeing the base metals going down. Talking about precious metals, again, precious metals have seen a huge dip, almost from $1,900. It has come down to almost $1,100 now. So I think this phenomenon will go on from here on also, because still the demand concerns are there in a lot of commodities like the base metals as well as energy pack in crude oil. But talking about precious metals, I see precious metals bottoming out near $1,000, near $975 to $1,000 is a cost of production. So we might see some up move from those levels, but yes, still there are some down moves left in overall commodities pack.
We'll of course come to what we are expecting in the new Samvat, but rounding up the previous one first, and Naveen, this one is to you. How would you sum it up? Because we've seen everything from a Fed rate hike possibility to China disturbance, all of that impact the currencies and commodities as well in the previous year.
Thank you very much, Manisha, and I would like to give my best wishes to all the viewers of ET Now on the occasion of Diwali and the festival season which we are starting off with. You asked me about the commodities for the year. We all know, as far as the prices are concerned, for most of the commodities, the markets have been negative for 2015. Also, this has been a good year for Indian markets per se, that a lot of developments, the regulatory developments which have happened in this year, particularly one of the prominent one is the SEBI and the FMC merger. Now, in spite that the commodities are on the bearish trend, and we have seen growth in the volumes of commodities in the last decade, but of late, the last 2 or 3 years have not been too great for the commodities business across the globe. With this merger in India, we expect that maybe in next few months or a year span of time from here, we may have the new products and the participants contributing to the commodity derivatives market. SEBI, being an autonomous regulator, would also help to gain the confidence and the trust of the markets towards commodity derivatives, and it's a very positive news overall. Talking on the price trajectory for the various commodities, let it be agri or non-agri, we have seen the prices on the downside. The major reason, Manisha, is largely the focus on the currency markets, particularly the strength in the dollar, which has impacted the prices on the negative side. Be it precious metal, be it base metals, or the crude oil, the markets have been showing a continuous decline. And for base metals, I think we all know about it, that the China, which consumes around 50% of the total production on the base metals, is in a problem of growing. Although they are growing at around 6.9% GDP for the last quarter, but there are concerns about the Chinese growth, and therefore the base metals also are kind of stable or on a low side. Crude oil have been on the oversupply from the last 1.5 years, and we maintain our view that the markets would be either bearish or within this particular range where we are trading right now for the crude oil.
Fair point. As you pointed out, well, yes, the FMC and SEBI merger was one big thing that has happened in the previous Samvat, and that would, of course, lead to a lot of change in the commodity markets. Kunal, coming on the previous year, what's your sense? What is the big event that you are looking at as we shut or close the past year?
Well, barring FMC and SEBI merger, there's nothing right. Nothing has gone right as far as the commodity markets. There has been a major downtrend in the prices of commodities, may it be precious metals, may it be energies, or may it be base metals and some of the agricultural commodities too. We've seen a steep correction from the price point of view and also from the time point of view. It has been a prolonged downturn from more than one and a half year that commodity prices have been continuously remain under pressure. Now, from the market point of view, yes, there are positive expectations going forward, and there is a lot of hope building that this market will develop. But as far as the price point of view is concerned, I think still there is a lot of nervousness amongst the traders and investors and how the global glut in the commodity segment will go down. I mean, how the inventories which have been piled up over the last 5-6 years how we are going to get rid of them, and that is the major question mark which is there in the minds of commodity traders. From the market point of view, yes, we are very optimistic after the FMC SEBI merger. We may see some more time, but I think we are going to see a lot of positive which are going to take place in this complex, and we are very hopeful.
Kishore, getting you in the conversation, it of course is the FMC SEBI merger, as Kunal was pointing out as well, has been the big boost, big plus that we've seen in the previous year. How do you think that would change the way the business is done in India?
I think this is one of the major milestone in the Indian commodity markets, though it came a little later than what we were all hoping to. But I think it's a great step. Number one, it helps in unification of entire financial world. It helps carving way for a single KYC, and overall it eases doing financial transactions, either it is equities, commodities or currencies or any other derivatives for that matter, the mutual funds, every other product which is available in the financial segment to be on a single KYC, and it's easy to monitor, easy to put money, shuffle money from one to the other asset classes. So it improves convenience. That's the number one positive which I am looking at now. And number two is a strong regulator always helps in strengthening the markets. A strong commodity markets is always essential for the overall economic development and upbringing of the country. So I think it will ease the way of doing business in India, the way of protecting yourself against commodity price risks. So typically when the government is focusing on Make in India program, as the more and more factories get set up in India, it is essential to offer them facilities to hedge their raw material risk, finished goods risk, etc. on a very well developed domestic commodity markets. So I think that is again an integral part of that. So and third is recognizing brokers, strengthening the system, strengthening the settlement guarantee fund. Obviously entire infrastructure within commodity markets will be strengthened, and I think these are the three major positives which I am looking at. Obviously everybody is expecting new products to be introduced, indices and options, etc. Obviously that is expected to come, but these are the major three positives for me the last year with the merger of the FMC and SEBI, and we are very hopeful that next year will be brighter for commodities.
Well, absolutely. Even if the commodity prices did not perform, this is one big thing that the markets really have taken well from the previous Samvat. Navin, coming to you, how would you look at that? And do you think there could be further, steps, reforms or regulations coming in from SEBI which could actually take this commodity space higher?
Yes, Manisha. I think this is just a start. I think government has done a good beginning, and the merger of CB and FMC. I think this will bring transparency to the market, and as my friends explained that new products will be launched, and we might see major products coming in, and we might compete in the global front. So I think. Yes, we might see some good beginning, and we all are hopeful that this might propel up the business, and overall commodities, in fact, might go higher than equities also.
All right, that's the view then coming in from our brokerages that, of course, the previous Samvat has seen very sharp declines in commodity prices, but FMC and SEBI merger is something that has given us lots of hope in the coming Samvat, and we could see some very positive changes coming in from that one. On that, we'll take a very short break. When we come back, we'll ask our brokerages on the prediction or the outlook for the new Samvat, on what commodities are they picking up in agro and non-agro space to go long or to go short. Welcome back, and we have the India's brokerages with us telling you on what commodities should you be picking up as we start the new Samvat from tomorrow onwards. Navin, coming to you first, and what are your outlook on the non-agro side of the trade in the upcoming year? Because we've seen almost all non-agro commodities, whether it's energy, precious metals or base metals, decline quite sharply. I mean, we're closing the year negative for them.
Okay. Manisha, I think from the non-agro side, we are slightly bullish on silver because of the deficit which we may see in 2016, the coming year. The demand and supply dynamics would be kind of negative for the supply side to be on the higher side and demand to be negative. We feel that the markets therefore would face a deficit situation in silver, and with that deficit situation, prices may slightly move up a little. As of now, as we sit today, the prices of silver on the international markets are quoting at around $16 level, and in India the prices are at around 36,500 levels. If we see the prices trajectory, we expect the prices in India to be at around 38.5 to 39,000. In international markets, we don't see too much of gains because of the dollar strength and expected Fed rate increase this year in December. So overall, it looks like to be that the silver would be approximately $17 levels on the international markets by end of the year, and maybe around $18 levels to start off the next year, the first quarter of the calendar year. Asking about Indian markets, we expect the prices to be, as I said, at around 38,000 from a levels of around 36.5 right now.
Kunal, that really, Ravindra, that really seems to be the top view coming in from all brokerages. Are all of you more bullish on silver than gold as we enter the new year?
Yes, Manisha, to some extent, because we have seen silver falling by almost 52% since 2013, and if you look at gold has fallen by around 34%, mainly because of the base metals prices which have corrected, and silver being 60% of its properties is industrial metal, so that's why we have seen more pressure in silver prices. So yes, if we compare silver and gold, I would be slightly more bullish on silver. But even if we talk about gold, I think gold is approaching its cost of production, which is around $975 to $980. So I think there is some more downside left, as I already told, that we might see a dip in almost all the commodities again. But I think it looks like it is bottoming out, because near $1,000 to $975 we might see some production cuts coming in, so that might support gold prices also. So even in gold, I think it should trade higher. It might trade near 1,200, average near $1,200 in 2016. And if we talk about MCX, I think a rupee factor might support the Indian prices, because rupee looks like might go higher till 68, 69 levels also. So on the Indian front, I think it will be somewhere between 24 to 26,000 on an average. And yes, silver also should trade positive in the year 2016.
All right, fingers crossed for that one. Kunal, what's your view on the precious metals and especially the fact that it's a Fed rate hike possibility in December? How do you see that impacting the precious metal sector?
Precious metals, I think the major focus is on what Fed does. And whatever Fed does, I think even if there is a rate hike by quarter basis point or half a basis point in 2016, I think one should not focus on such events. One should focus on the demand and supply. And one should also remember when Federal Reserve raises the rates, the inflation will be on the uptrend. So a momentary or a correction for the time being would be the good buying opportunity for precious metal. And I'm of the firm believer that 2016 is going to be the year of silver rather than in gold. I see tremendous rise in silver application in the industrial application, in electronic devices, in pharmacy, in various segments. So the demand is rising at very rapid pace. And if you look at the silver ETFs, the holdings have not been slashed. The way it happened in gold, there is a completely different scenario in silver. So silver, to me, 33,000, 34,000 on MCX in India, or when you talk on COMEX, $14 seems to be the bottom. And we are going to see silver in 2016 somewhere testing 40,000 rupees in the rupee terms, 42,000 rupees in the rupee terms. And in dollar terms, we are going to see levels of $18, $19. So I'm very optimistic on the outlook of silver than gold.
Kishore, I want you to come in for this as well. Silver seems to be our hot pick right now for 2072. Are you playing along with that?
I am little less optimistic on Indian physical demand picking up, especially in gold. Probably we have some pickup in silver demand, and obviously that has been reflecting in the silver import numbers. But I think gold will not have that special place right now, even in this current year for the domestic consumers, because our equities have been doing better. We have bond market which has been doing better. I think we have an overall slightly positive environment in domestic markets compared to other emerging economies where there have been a currency crisis, where there have been equity markets collapsing. Even the countries like China, where the equity markets collapsed and even the currency has been falling. So we'll be slightly outlier as well as the economic positioning is concerned. So a better economic prospects will keep the undertone of gold demand slightly lower, and also a bad crop this year after the poor monsoon and the kind of El Nino effects we are seeing right now. So that will also deter some of the rural demand which we normally have post Diwali and the summer season demand which normally we have from the rural India. But I think globally the physical demand for gold will continue to increase, especially driven by some of the emerging economies.
Sure, haven't heard you pick up a buy call yet in commodity space. So how are you putting the commodities in your portfolio as we head into 2072?
I think definitely I'll put 3-4 commodities into my portfolio. Number one will be copper. Again, not at the current levels, anywhere close to 300, 310 levels should be an ideal levels where to go long in copper. Second one is bullion. Obviously, gold is looking very firm. Especially when I'm saying why I'm bullish is typically if you're looking at the emerging markets like Brazil or even Russia or Indonesia, Malaysia, or Korea, where there has been an equity market collapse as well as their currency collapse, we typically see that their physical demand in gold will continue to be underpinned, and we have seen this equity market collapsing in last a couple of quarters back, and typically there is a lag period of 6 months to effect. So now this quarter and the next quarter we'll see these countries like even Turkey, some of the Middle Eastern countries will be continue to see improved physical demand for gold. So even if I put a 10% incremental growth on demand numbers globally, I think that would push us into around the $1,300, $1,340 levels, and rupee, which we are pegging somewhere close to around 67 by this year end. So that would take us to somewhere close to 33,000, 34,000 in domestic markets. So purely I am looking at a very safe way of looking at gold. We'll be making a new high in domestic markets. probably anywhere in next 18 to 24 months.
On that, Kishore. Ravindra, coming on agro commodities, because while the non-agro space has not done so well, and it's difficult to really pick there because lots of international cues come in on that, the agriculture space in India has done quite well. If you look at the spot chana prices, they are up by 70%. It has been a 30 to 40% of a gain for spices, for edible oil space as well. Which one are you picking up from all of these?
Well, I would go for guar complex because we have seen guar prices going down steeply, mainly because of the exports being hampered. We have seen crude oil prices going down to around $42. Now, this was the major factor because it is being used in the oil wells as a gluing agent. So I think guar seed would be my top pick because we might see crude oil bottoming out somewhere near $30 to $30, and we might see OPEC coming in and OPEC and non-OPEC countries coming out with some kind of a solution for price stability. So I think the exports might pick up going ahead in the guar complex, and we might see a good up move of say 20 to 25% from here on. So I'm pretty much bullish on guar, and I would go for guar as the best pick in my portfolio in the agro pack.
All right, so guar is the best pick in agro, silver and copper in the metal space, and crude prices may still see some concern, but that seem to be bottoming out as well, is the view coming in on commodity space for summer 2072 from our top brokerages. With that, Ravindra, Kunal, Kishore and Navin, thank you so much for joining us with your outlook on 2072 in sense of commodities. Thank you so much for watching, and happy Diwali to all of you.